What's up, guys? You are listening to the YVR REMO show, where we talk all things Vancouver real estate and mortgages, take boring topics and make them interesting. Make sure to stay tuned to listen to everything you need to know how to put cash back in your pocket, create wealth in real estate, and simplify the complicated. All right. It's another fantastic day today. Beautiful day outside, wherever and whenever you're listening to this episode on your drive, your walk, your workout, what's going on. I'm excited because today we have another fantastic guest joining us from the US of A. We've got someone that we in the mortgage space have aspired to and watched a lot of what him and his company have been doing for the better part of a few years, and really is tapped in not only to the mortgage space, but the real estate space. Mr. Ryan Grant joins us today all the way from Orange County, and I hear it's nice and warm down there today. Ryan, how are you doing?
We are doing well, man. It's a great day down here for sure.
Fantastic, man. Fantastic. Well, I want to preface by saying we've thought about having you come on the show for a little while, but we recently saw a webinar that you did in partnership with a real estate agent, and it really piqued our attention because Derek and I were talking about this before the podcast, and what's interesting is to look at the trends of what's happening down in the United States compared to Canada, and it's not like a direct mirror, but there's so many comparables in the way that not only the market trends occur, but the timing. It just feels like we're about 3 to 6 months behind. So, I mean, I think as we start off, I'm really kind of curious right now, going into 2022, what is the general feeling that you have from people who are becoming homeowners or wanting to become homeowners in 2022? Is it stress, happiness, concern? Like, how are people feeling, and what kind of questions are you getting?
For people who don't own homes but want to become
first-time buyers?
Fear. It's probably the most common emotion that we come across, right? Because it feels like the housing market is running away from them. But it also, in a way, like the mania feels like 2006, 2007, right? The Great Recession and then the crash that we saw there. And, people are just struggling with affordability. They're struggling with the concept of paying X amount of dollars for a home that they don't feel, should be, that they should have to pay for that type of home. And so, our number one priority as mortgage professionals really has nothing to do with what we think most people think our job is, right? Most lending professionals think their job is to, pre-approve a client and then ultimately fund that client's loan when they go into contract, or, refinance them once they've made that decision. Our job as real mortgage professionals now is to remove the fear and the anxiety and the uncertainty that most people have and replace it with excitement, confidence, and motivation. We do that by really taking time to educate people, right? Because so many people are making emotional decisions right now. And I know real estate is highly emotional anyways, right? But they're making bad financial decisions because of the emotions. And unfortunately, for almost the entirety of our industry, real estate and mortgage professionals have not really seen that they need to help people do that. Like when someone says to a real estate agent, now's not a good time to buy, or there's nothing I can find in my price range, or I think I'm going to rent for a little while longer, wait for the market to come back, or I just think this is crazy. If we allow them to make that emotional decision, the responsibility for their lack of financial success long-term and their instability in their housing actually should fall on us. Right? It shouldn't fall on the client, right? The realtor and lender shouldn't look at the client and be like, well, they made a bad decision. Like, we have an obligation to those clients to say, look, I understand that's how you feel, but have you actually looked at the housing market and what it's expected to do over the next 20 years? Have you actually looked at not the national economy, but your personal economy as it relates to home ownership? Because I think if you do those two things, and then we show you how we can help you stand apart from the crowd, you'll actually go from thinking it's not a good time to buy a home to thinking it's financially irresponsible not to buy one. Right. But most lenders and most realtors don't have that level of intentionality. And that's absolutely what it takes today to help people in a way that we really should.
There was a lot there. I mean, I don't even know where to start to unpack that, but I'm going to go back a few points and say, I agree with you on all accounts. And the emotional component is at an all-time high right now. Like, it is absolutely at all-time high. This is something people have dreamed of for 5, 10, 15. Heck, we have first-time buyers who are in their 50s. They've thought about this forever, and they're just watching. They're almost suggesting like it's out of my grasp. And something that we see on a daily basis right now is exactly what you've mentioned. You know what? I'm going to step back. I'm not going to pursue this anymore. I'm exhausted. This is draining emotionally, physically, mentally, and so forth. And then next thing you know, obviously it passes them by. Well, you specifically suggested that there are certain things that we can do to help them explain and understand, or help to explain and understand how this could impact them going forward. What are some things that maybe you suggest, or some things that a real estate agent, or maybe just a client on the end who's listening to this right now, what should they be considering if that's on their mind right now, backing out? What are the types of things that they should dig deep on and look into?
The reason people aren't buying homes right now, assuming they can qualify, right? Let's make the assumption that if you can buy a home, that that you should. The first thing is people typically want to buy the home as opposed to a home, right? And I liken it to a train, right? And so you see this train and you want the car in the front, right? You want that one, but and it's moving farther. This car in the front is moving farther away from you, right? So every minute you wait, the car get less and less and less, right? They get a little, less nice. And then all of a sudden you're looking at this last one, you're like, I don't want to buy that. But it's like, that's what you can buy. You need to get on that train. And then once you're on it, you can start to walk up to the front, right? Because you're moving at the same speed. But people make the mistake often of, I don't want to change my way of life. Maybe they live by the beach and they're renting right now, or they live in this cool spot where they're renting and they don't want to have to move inland or to a less desirable area to become a homeowner. And I would just caution all of those people, please, look at the fear. What is the opportunity of waiting? What is that going to cost you? Yeah. Because people don't look at the rent trends right now. I mean, I got a report yesterday that rents are up 14% year over year. And Redfin just ran that analysis. And so that's outpacing home prices, right? Home prices are going up maybe 8 to 10. And so people are making the assumption, I don't want to buy because I feel like it might hurt me if I buy. I might buy at the wrong time. I might overpay for a home. None of those things are going to matter 5, 10, 20 years from now. If you just get into home ownership, it's a smart decision and will be a smart decision. If you stay a renter, you might be displaced from where you want to live because you can't make that decision. Your rent's going to go from $2,000 to $2,300 to $2,800 to $3,000. All of a sudden, you can't even afford to rent where you want to live, much less. So you're going to be forced to move to that place just to rent there, and you're going to be forced to move somewhere else that's not desirable to rent there. So people should be more afraid of not buying a home today than they are of buying one. It just, again, it takes intentionality. It takes conversation. It takes, somebody spending more than 30 seconds on a Google search before they go back to watching Netflix to really say, hey, I need to dive into this, because if I don't, I could get hurt by doing nothing.
And one of the common, you hit the nail on the head there, but one of the common conversations that we're having multiple times every single day is, like you said, well, what if prices go down? What if I have to overpay, right? And the general feedback on that, to give someone confidence, is if this home's affordable, if it's within your budget, if you can afford the payments, even a bad month, if you can live there comfortably, right? If you like the place that you're living in, if it's not a 1-year plan, it's like a stock, right? A stock could go down, but if you sell when it's down, yeah, you're going to take a loss. But if it's a home, if it's a place that you're going to live in, if it's not a property that you're trying to flip in 12 months, if you just look at the history of real estate, it comes back, right? And you're going to come out ahead. You're paying down principal. You're not renting. I just feel like if it's a primary residence, no question, if it's a long-term plan, at least if it's a 5-year plan, you can't go wrong.
Yeah, I tell people my personal story a lot, because I think we as human beings learn better through story than we do through, just simple logic.
Yeah.
I bought my first home in August of 2006, which was legit the worst time in, other than the Great Depression, where you could have bought real estate. I paid $760 for it, and within 2 years, it was worth $450. And, people are like, okay, well, that's a scary story. Why are you telling me this? And the reason is because, I didn't have to sell that house. Right? There was nothing I afforded it at the time, and I could still afford it then. And even though my income went down because I was in the real estate and mortgage business, I just brought in some friends and they, paid rent and stayed in the room. But now that home is worth over $1 million. I've been renting it for the past 8 years. I have a renter paying it down. And, you look back and you go, that was a great real estate decision at the time. Now, would I have rather bought it in 2009 or 10? Of course, right? But same way you can't time any other market, you can't time the housing market. So people just have to be aware. And I actively talk to almost every economist I can find, every financial, wizard that I can find out there. And I ask, what shoe is going to drop that will bring housing prices down? Not slow appreciation, because there's a lot of things that could slow appreciation: affordability, buyer concern, ability for, home buyers. Like, there's a lot of things that could slow appreciation. Just no one has been able to tell me one shoe that could drop that would actually lower housing prices anytime in the next 20 years or the foreseeable future. So as soon as someone can tell me that, I might change my tune. Otherwise, we are all on this mission to help people not become displaced, by not taking action. Because 1 out of every 6 homes right now is being bought by an institutional investor. Like, you're not competing against your neighbors for houses anymore. You're not competing against your community. You're competing against BlackRock. Right? You're competing against, people that have more money than they know what to do with, that want to buy every affordable home and never sell it.
That's interesting. And I want to stop there for a quick second because we hit a couple of key points. Now, what you're talking about, I want to unpack that because we're not seeing as much of that yet in Canada, but we know what you're talking about. But I'm not sure a lot of our listeners know exactly what you're talking about here yet. Could you maybe just explain a simple overview or a broad overview of what that is you're talking about, so we can educate our consumers on what they can expect and why they need to be looking at opportunities if they own homes to acquire more? And you obviously just break down, of course, why there's going to continue to be a lack of supply here.
I've always had this saying is follow the smart money, right? And the smart money is just institutions that know more about financial trends than the average person. And so when you see, big, massive chunks of money moving certain places, you should pay attention to it. And what we're seeing now is these hedge funds and Wall Street are looking at the fact that we have baby boomer type birth rates, and we've had that for the past 20 plus years, right? And this is coming off of the Great Recession of the 2007. But for the last 15 years, home builders have not built even the average number of homes to even keep up, even remotely close to keep pace with that. So it's a simple supply and demand issue, right? Like, there's going to be millions and millions and millions of people that need a place to live. If Wall Street owns all of those homes, then rents continue to climb and climb and climb and climb. And they will never sell them, right? Because they're going to, if they can get a 6%, 7% return on their investment year over year, they're doing awesome, right? But it's going to be 10, 14, 15%.
Would you suggest that in most of these purchases that you're talking about, are these guys buying single family homes, single unit stratas, or are they investing in multi-unit? What are you seeing? All of it.
Yeah, the answer is yes.
Okay.
Right? Not only that, but they're paying home builders. Like, Lennar put $2 billion into, building new homes that they're not planning on selling.
Right.
Like, what home builder builds homes that not to sell them? That's historically been their job.
Yeah.
But they're like, well, we're going to make more money holding them.
Right.
Right. We're going to create a bunch of homes that we're going to rent out, and people are going to pay it because they need a place to live. So they want to buy everything, and they want to create a world where you own nothing and are happy about it. And the dichotomy between the haves and the have-nots in our society is growing, and COVID exponentialized that even more, right? Like, the Great Recession, anytime we see big market drops, all the people that have the money on the sideline come in, take advantage of it, and it gets harder and harder. So, we definitely want to better serve the communities that we are in. And the best way we can do that is to educate them that, this waiting thing is not smart. You need to do what you can to own the roof over your head, right? Because it gives you the ability to at least keep up with the market, right? And then if you can buy investment properties, do that, right? This is it's not a get rich quick thing, but it is definitely something that, you and your generations to come will appreciate.
Question for you on the corporate investment piece. Are there any talks, or do you foresee any government intervention, like regulating that?
I would hope so. I mean, I think they're kind of out to lunch on this. I mean, they were talking about at the end of last year creating a first-time homebuyer tax credit. It's like, what are you doing? We don't need that.
Yeah.
Right. Like, you should be subsidizing home builders, right? Because they can't build enough homes fast enough because of supply chain problems, costs, bureaucracy, red tape of deeding land. So you should help home builders build more homes and then say, hey, we're going to subsidize it, but you can only sell to, families or people that have a certain net worth, right? That's how the government can step in and help solve this problem. But they're going the other direction. They're like, hey, we'll incentivize, like, everyone already wants to buy a home. They don't need a tax credit. You need to do a tax credit when no one wants to buy a house, right? That's when you want to incentivize it.
Yeah. So touching on the builder piece, I mean, locally here, if someone buys a plot of land and they need to rezone and apply for permits, you're literally looking at a couple of years before they can put a shovel in the ground.
For
Similar
sure.
Where you are?
Oh yeah. And depending upon the city, the state, or the zone, it could be even harder, right? If there's any sort of protected land or anything like that, which I understand, but we need to be able to build homes. And even if we have to start going vertical in some areas, right? But we just, if the people who have all of the money are the only ones doing it, we're going to have a massive divide between, the 1% and the rest.
We're seeing the exact same issue in Canada. It's funny because the government, obviously, well, I shouldn't say obviously, Derek, I mean, you can speak to this too, is we see more pushes towards incentivizing the corporations to build these affordable housing condos for rent as opposed to purchase or ownership, which is interesting because, again, that's feeding into, obviously, the lack of supply for home owners. And we're seeing, a lot of conversations about restricting people's ability to buy investment properties or second homes. So it's almost like our government is basically suggesting that the standard homeowner who's buying a second investment property is the problem here, as opposed to supply or demand and so forth. So I do want to transition a little bit here, not yet into the second home piece, but I want to understand, because you guys are facing the same issues as us when it comes to inability to purchase, lack of supply, multiple offers, 15, 20 people bidding on a home, hundreds of thousands of dollars over, and the fear of that. I really just want to understand, like, what are some of the suggestions that you and maybe your team are coming up with, whether it's on your own or for your clients or with a real estate agent, to help people win the battle, win the home, or find more real estate for that matter? Maybe just a couple snippets as to what you could suggest.
Yeah, so we have a platform we created here at Neo called the Bulletproof Buyer. I know it's kind of a interesting name, but there's a multi-step process to get people in a position to take advantage of any home that they come across. The first is they have to be confident that it's a smart decision. Because there's a lot of people who have pre-approval letters that they got from some online company. They click button, got mortgage. So they have something that says what they can do, but they don't actually know if they should do it. And so a home will come on the market and they'll be like, oh, wow, I don't know, it's kind of pricey, blah, blah, blah. And it's like, that home is going to be gone in 10 minutes.
Yep.
Like you have to decide, right? And so, and the reason they're not sure is because the housing market, it feels scary, right? So we spend time showing them the data that I just referred to, right? That I just talked about. So then they can say, okay, check, right? Like, we know that the housing market is running away from us. We know we have to get into it. Second part of it is, how does it impact them financially, right? Because again, that click button, get mortgaged, all it told you was you can do something. But if you're paying $2,500 a month in rent and this pre-approval says you're going to pay $4,000, well, you can, but not a lot of people are super excited to do that. Right. So we spend time going over a 5-year rent versus own analysis where we show them the future of both. We show them the tax advantages. We show them the appreciation. We show them what happens if they don't. Right. So now we've gotten them really, really confident in the financial aspect of it, to the point to where they believe, again, like I said, it's financially irresponsible not to buy a home. Those two things are missed by 99% of buyers. They don't get that education. They don't get that advice. All they have is a letter that says you can go do whatever you want. And real estate agents and lenders expect them to go do it, but that's not going to happen, right? They're going to tiptoe in, they're going to lowball offers, they're going to hem and haw, and the market's just going to keep going right by them. So once those two things are taken into consideration, now we want to make them look as much like a cash offer as possible, right? Because cash offers get accepted more often and they get accepted at lower prices. So we fully underwrite everybody's loan in advance, meaning that we do all the work most lenders do during the transaction before. So we don't have, we can remove any sort of loan contingency that the client might have, meaning that it reduces the risk to the seller. And then we do an appraisal analysis and figure out, hey, if we're putting enough money down and we're comfortable with where we're coming in, are we confident in removing the appraisal contingency, which is another one that is a risk for the seller? Right. So more often than not, we will remove the appraisal contingency as long as the buyer stays protected. So at that point, client is just as good as cash, right? They're going to have an inspection just like a cash offer would, but we can close the transaction in 15 days, no loan contingency, no appraisal contingency. And we call the listing agent and we have the conversation about, hey, why do we structure it this way? How well qualified the clients are, what it means, and why we're closing so quickly, why we remove contingencies. So we have over a 74% offer acceptance rate, where the market is typically about a 10% offer acceptance rate. For a couple, just those reasons, right? The client is confident that they should buy a home. They know the numbers. At that point, all they need to do is find it. And then they oftentimes will save money on the price of that home because they don't have to be the highest price to beat out cash offers because they look just like one. And then we can close quickly. So, just the way we structure the loan helps. So all those things are necessary in this market to really give somebody a good fighting chance.
I have one question I have to ask on that, which is, you actually brought up home inspection there. Now, is that contingent? So is the offer contingent on the home inspection, or is the home buyer just doing a home inspection for the sake of making sure it's done?
No, almost always there's a contingency for the inspection. That way, if something comes back in the inspection that's off or wrong, or the home is about to fall off the foundation, the buyer has the opportunity to ask the client or ask the seller to fix it, and request for repairs, or they can pull out of the transaction and still get their earnest money back. So it's really rare to remove that. Some sellers are doing like pre-inspections right now, where they're doing inspections on their own and they're just showing it to buyers. And then, some buyers are going to remove the inspection contingency if they feel comfortable looking at it. But, it's like a teacher asking you to grade your own paper. Right? It's like, I got an A. Well, we don't really know the inspector, right? Like, you usually want your own inspection.
Yeah, I mean, down here, people are quite literally deposit in hand, no inspections, no appraisals, no final approval from an institution for the most part, right? And the part that we struggle with the most is really that inspection, because we can do a ton of due diligence on the people and their borrowing power and their financial situation. We work with the real estate agents to get a good gauge on value and make sure that we're not too far out of line. But that home inspection not being done can cause massive issues. And if you're doing one after, you're committed to buying that property and there's no getting out of it, right? So that's the risk that we're seeing a lot of people take, which is unfortunate. So it's good to hear that you guys have that structure a little bit differently. I wish that we could make that happen locally.
In Canada, is the inspection reviewed by the lender?
No.
Okay. Yeah, we're the same way. So yeah, it doesn't matter what the inspection says, right? As long as we get an appraised value and as long as we have, an approved client, we're okay. But yeah, it's really scary to buy a home essentially without looking under the covers.
That's probably the only good suggestion our government has brought up in the last 6 months, which is supposedly providing the timeline to do that. So, I mean, there was a lot there. It's actually interesting, Ryan, to hear you say that, because I can't speak for most mortgage brokers, and I can definitely speak for banks. Most people I know don't do a lot of what you just suggested. We do a vast majority of what you said, with the subject to the things that we cannot do, or make an offer from there. So I'm glad that we're aligned. And it sounds to me that for the most part, we're going to toot our own horns here. At the end of the day, it just comes down to the professional that you're working with to provide the advice and the support required to do that. Because I could tell you, if our client goes and walks to a banking institution, none of that's happening. None of it, not a single bit. I can't speak for other mortgage brokers. There's some great ones out there. I would suggest that a large majority probably won't do that, not because they don't want to, but because either A, they don't know how, or B, they don't have the capacity or the time. Are you finding something similar down there, where there's the very small percentage of people who are doing these things? I
just think that most mortgage professionals haven't had the direction, the leadership, the training, the systems, the platform. The biggest thing is the belief. And I wish we would make it a more difficult process to become a mortgage professional, right? Like, there needs to be some ethics around, like, our job. I tell every client when we first start working with them, I say, look, Alex, I want you to know our job is not to convince you to buy a home, right? It's not to try and pre-approve you for a mortgage. In our time today, I just have one goal, right? And that goal is that I want to give you all the education, advice, and guidance possible to allow you to make a confident decision. And that confident decision could go one of two ways. You could either confidently decide it does make sense to buy a home, and we'll go ahead and take the steps to do that. But we could come to the agreement that, confidently it's not the right time to buy a home, right? But then we'll just develop a plan and a strategy and a timeline. Either outcome is fine, right? And then from there, we need to remove the outcome from the conversation. And I just don't, people aren't trained that way. It's like, in order to make money, I need to sell a loan. So in order to sell a loan, I need to convince Derek to buy this property, which is wrong, right? It's just, our industry shouldn't do that, right? We should literally just look at the analysis of the client situation, their finances, their situation, their future goals, and give unbiased advice that says, here's what I believe you should do, whether it's now or later. And either way, we're going to help you through the whole thing. But it's just not in our DNA as an industry, unfortunately. And that's really, one of the reasons we created Neo, is to try and change that, right? Like, everybody here knows we don't even use the word sales. We hate the word sales. Like, we are consultants, we are advisors. We help people years before a transaction, and we help them years after a transaction. But no one expects their mortgage lender to do that, which is why they never call us to say, hey, can you help me figure this out? They only call us after they believed they figured it out. And 99.9% of the time, they have not figured it out.
So we're gonna actually transition that, because we just talked about getting those offers accepted and what you do. And again, I know you don't know exactly what we do particularly up here, but one of our challenges, and homeowners may or may not know this, again, people who are the end user listening to this, looking to get educated, you might not know this exactly, but your real estate agent quite frequently is the first, well, you probably do know this, the first person you talk to about your home, or buying a home, or selling your home, or getting into it. And there are some real estate agents who we work with who are, know right away that working with a good professional is very important for a client. And so they'll introduce us or someone that they know does a fantastic job, and try to make that introduction. But then there are others who are concerned about disrupting the client's thought process. They're already pre-qualified with their bank, or maybe you're already pre-qualified with someone else. I don't know if it's like this in the US, where a lot of clients up here feel like they have a relationship with their bank. I'm not sure exactly why, but they feel like they have a relationship. What would you say to maybe the agents listening right now as to why the importance, or why it's important for them to introduce their clients to someone who actually cares, and what should they be looking for in that partnership? Because their biggest concern is, I don't want to disrupt the client and make them stressed out about that when they're already focused on the home.
If we had 4 hours, I could talk about this.
We'll get the short version, I guess.
I think that the easiest thing, and most time, people are wired to think, okay, well, what's in this for me, right? So like, if I'm a real estate agent, my client's already pre-approved, I'm just trying to, I have a hard enough job finding them a property, getting them home, getting their office up, getting them into the home, right? So I don't want to have them navigate off the highway to go do something else to get them back on, right? And so usually people will just stay status quo. There was a study that was done here by Trulia a few years back, and I think it was just an American study, but 44% of all homeowners and 63% of all millennials have some form of regret within 1 to 2 years after they've bought a home. And it's because their experience in buying a home lacks education. It lacks consultation. It's just, here's your pre-approval letter. What house do you want? You want that one? Great. Let's go buy that one, right? We make an offer. We close in 15 to 30 days. You're a homeowner. Congratulations. And at that moment, the client's happy, right? For more often than not, they're happy, right? Let's assume everything went well. But then they start realizing, oh man, nobody taught me about home maintenance or home repairs or home upkeep. Nobody said anything about that. And nobody told me about supplemental property taxes. I wasn't aware that, this was going to be so costly, or man, I wish I would have bought a bigger home. Like, there's all this list of regrets that people have. And what happens is that happy client turns into an unhappy client a year or two later. And they blame the real estate agent and they blame the lender, because they're like, would have been nice if they would have told me some of these things, right? Like, they didn't really give me much advice or guidance. They just completed the transaction that I asked them to help me complete. But most real estate agents and lenders don't actually think that's their job, right? They're just there to complete the transaction, do it well, good customer service, protect them with the guardrails. And so if you're a real estate professional, your number one priority should be protect your client and make sure that they are proactively growing their generational wealth and proactively planning for real estate goals for the next 30 plus years. And we all know that lenders have never thought to do either of those things, right? But there are a few of us out there that really believe in that. And so if you want to run a business that is inspirational for you, that is fulfilling, right? It's not just transactional. that you can look back and see with real economic indicators how you've impacted the livelihood of your clients beyond just helping them buy a home, then you have to find a mortgage partner who believes in adding value to the client, not just during the transaction, but well before, and most importantly, well after. And there's so many other things, right? Like, they're not going to be fully underwritten with an average lender. They're going to write 30-day. I was up in Washington the other day speaking for a real estate group. And I said, who here has pre-approved buyers? Everyone raised their hand. And I said, who here is writing 30-day offers with loan contingencies and appraisal contingencies? Everybody looks around, kind of starts raising their hand. And I said, your clients are an ant. You're the kid with the magnifying glass, right? Like, it's torture to put your clients through that. And they're all just like, okay, well, what else do we do? Right. And then I told them all the things we do, and they're just like, okay, this is what we should be doing. Right. So everything from just getting them into a home, to the advice, to the planning, to the after part of it, what services and strategies, like, we have a customer success group that calls our clients every single year on the anniversary of their transaction closing. And we help them proactively navigate the changes and evolutions in their life and plan for future real estate. And our agent partners love that because it's just an extension of their team, right? So they can make those commitments. And we want to change. We want to fundamentally redefine what it means to be a real estate or mortgage professional. And that is the level of standard that we believe should be expected from us as an industry.
There's a lot to unpack there, and we didn't even touch on the importance of the preparation and even the pre-approval process, which was a whole other bag of worms there. Derek, you had a thought on that?
I was just going to say, I think we'd work well together if we weren't in two separate countries. We run a very similar model, right? And you know what? One thing that stood out, what you just said, which is the worst part of all of this, is there's so many brokers and lenders and real estate agents that aren't going to these levels and to these lengths to help their clients. And that could even be in a normal market. And you throw in a market like we've seen for the last 24 months, we run into people that have been declined from their bank, and their bank gave them the green light to go subject free, right? Without doing a full underwritten pre-approval. There are just so many people that don't understand the risks and the depths and where you have to go in this process to actually help a client get into a property, but help them get into that property with very little risk, right? And that's the scary part about these markets, is there's way too many people with not enough education to confidently help their clients achieve their goals in this market. It's frightening, very, very frightening.
It's not a lack of want, right? Like, the desire to do all the things that we do. I've never run across anybody that's like, I don't want to do any of that stuff, right? As soon as I tell this to mortgage professionals, and I tell it to real estate professionals, it speaks to almost all of them. Now, maybe there's some that it doesn't speak to, but I just haven't heard from them. Everybody wants to do it. Either they don't know how, they don't have the time, right? Or they don't have the team, right? So it's one of those three things typically. And so we have to solve for those, to help our real estate professionals and help our mortgage professionals to really elevate to a place where not only they should be, but the client deserves to have from an experience level. So that's one of the things we're really focused on right now, is how do we help more mortgage professionals and real estate professionals develop the same conceptual platform that we have, and allow them to really, give clients what they not just what they want, but what they really need.
Yeah, there's so much packed in there. Again, I feel like we're going to have separate topics and conversations on each of these items. One, I'm going to transition here into a different topic because we've got a limited amount of time with you here. And it's something we touched on earlier that I said we'd come back to, and that's the concept of buying a second home or a third property. And just your thoughts and feelings towards that and how you have those conversations. Let me preface by saying we're big advocates of teaching people how to leverage and utilize their equity for the purposes of buying assets. And assets obviously are something that's going to continue to grow in value or earn the money, make some passive income. We talk about it all the time. That being said, there's a lot of fear, concern around it. Again, we talked about property values decreasing, we talked about rents going up and so forth. I'd just love to hear, just generally speaking, your feelings around homeowners learning how to do this. Is this something they should consider? How do you explain it?
The same way that we would, the same advice I would give to a client is the same advice that I follow myself, which is no advice ever works for every person, right? So, I believe in having balance in every aspect of your life. And so we have clients that are over leveraged in real estate. right? And they aren't diversified into other asset classes, which I believe would really help them. And then we have clients that have no, assets really in real estate. They have a primary residence and they have a bunch of money in the stock market and they have money in, these different areas. But a primary residence, for all intents and purposes, is a liability, right? Because there's no income producing from it. It's just an expense.
Right.
So an asset is an investment property, right? Because it's income producing, not only in, cash flow, hopefully, but also in appreciation. So when we talk with our clients, we always tell them, hey, whether we're buying our first home or our fifth home, we want to make a real estate plan. Right? We want to know what we're doing and when we're doing it, how we're doing it. Some people will sell their departing residence and turn it into a rental, and then go buy a new home. They'll go buy a new home and turn their departing residence into a rental. And sometimes it makes sense and sometimes it doesn't, right? Depending upon capital gains, what type of property that is. Are they selling a property that is really more of a transitional rental or home? Like, if I were to sell my home, it's not a good renter home because the person who can afford to rent it can definitely afford to buy. They're just not in position yet. So I'd have a lot of turnover there. So it would make more sense for me to sell that and then take those assets and diversify it into multiple rental properties. So every person's going to be a little bit different, but most people just they never plan for real estate. It's very reactional and it's very emotional, right? So they either try and keep up with the Joneses or something happens in their life where they have to buy or sell a property. But very few people look at investing in real estate the same way they look at putting money into their 401k. And so we just have to get people open to the idea that it can happen. There's a lot of people we'll close the transaction. We'll do our first annual review and say, hey, what's your future real estate goals? Like what's our plan? I don't know. Don't really have one. Just plan on living here for a while. Okay. Well, have you ever thought about buying investment properties, to help you from a, wealth and retirement perspective and generational wealth for children? Not really. Okay. Well, why don't we do this? Why don't we just put together a plan for you, right? If you were to save $1,000 a month, right? If you were to save, whatever your, discretionary income is, or whatever, revenue you have left over after you pay your bills, like let's figure out, and we show them kind of the waterfall effect of finances, right? So emergency fund, pre-tax retirement, and then it waterfalls all the way down into your opportunity fund. How much money do you have left every month to go into that opportunity fund, and where are we allocating it? So we've been able to help clients, buy 3 or 4 investment properties over the last 10 years just by saying, hey, let's just set a goal. Every month you're going to set aside this amount of money, and in 24 months, we'll have enough of a down payment for you to put 25% down on an investment property, and that'll be our home number one. What do you think? Yeah, that sounds like a good idea. Great. And then we call them the next year. How's it going? We kind of do, then 6 months in, we're starting to work through the plan and get closer. We have a saying that if anyone calls us and says that they want to buy, sell, or finance a home, we've already failed if it's a past client, right? Because we should be so proactively engaged with our clients that we help them decide when to buy, sell, or finance a home because we've educated them and we've helped them work towards that plan. So that's really how we approach it. In terms of second homes, if it's a true second home, you just want to make sure you have the liquidity and the income for it, right? But a lot of people are buying second homes and then turning them into VRBOs, and it ends up being a rental, right? So just depends on the definition of second home or investment property.
Yeah, the one takeaway, there's quite a few takeaways, but the biggest one right off the top was the fact your primary residence, it is an asset, but it's also a liability at the end of the day, right? In that perspective. And how many people, I don't know how many people you talk to, but a lot of people we talk to are saying, maybe they're 40s or 50s, and they're saying, all they have really at this point right now is some savings and our RSPs up here. I think you guys would have a 401k, which would be similar to that. And they're saying, well, when I get older, I'm just going to sell my home and downsize. And that blows my mind because, well, first of all, you see where real estate values are going. Second of all, we've seen it time and time and time again where that person does sell their home, downsize, and then a few years later, they're out of money. And that happens really, really, really quickly. So our conversations with every home buyer is you need to look at, if it's not real estate, so be it, but you need to look at using the equity that you have right now in your home for the purposes of building that opportunity that you've discussed there. So glad that we're aligned on that piece.
Yeah.
Well, let's, I guess, just follow up, wrapping up. I just, curiously, on my end, I'd love to know, do you guys see much in the way, I mean, I know you're in Orange County, so it's kind of focused right there, but have you heard more in the way of people, or Canadians, I should say, specifically, looking to purchase in the US and looking to make moves down there? Again, it's just a general question, but love to know from you.
We lend all over the country. My personal team will lend from Tennessee, Florida, all over the place, mainly because there's this exodus of California, right? A lot of people leaving California to go to more tax appropriate states for them in different phases of their life, to go to more cost effective places. And so we've been lending kind of all over the country, but we're also seeing a lot of people come to California, right? And so it just depends on where you want to be. In terms of like foreign national type stuff, whether it's Canadians or people coming from any other country, I don't know if I've seen any sort of trend other than, we've always kind of seen the Canadians coming into the Palm Springs market, right? You get kind of the snowbirds that will come for seasons. I just think we're seeing most people live where they want to live now, as opposed to where they have to live because of, what COVID has done with remote work. And there's people that are moving to different countries and still working, with their same company. It's just same way we're working today. We'd be having a meeting, whether we worked in the same office or whether we were 4 countries apart. And so I really believe people should look at, where do you want to raise your kids? Where do you feel like you're going to have the best quality of life? Where is your income going to, give you the best opportunities? And then from there, whether it's moving countries or moving states or moving cities, people should really actively look at that.
I threw you a little curveball there. I was just curious more than anything else. So no, that's
I don't know the Canadian trend, but it'd be interesting to know.
Well, with that being said, the fact that you work all across the United States means that I would imagine you probably have access to some foreign buyer programs. So we could certainly, anybody listening to the podcast, if you'd like an introduction to Ryan's team, reach out to us directly and we'll make sure that we get the appropriate information so that we can help match that up. And Ryan, we'll touch base offline to discuss and make sure that we understand the guidelines so that our clients are properly set up there from our perspective. I think the biggest takeaways from me, obviously the preparation piece, Ryan, that you just mentioned. I really enjoyed the conversation that you had there in relation to home buyers and homeowners in general, finding confidence not just in the fact of buying a home, but also understanding it as a part of their financial future. Of course, understanding around the preparation that it takes, and that real estate agents listening to this should understand, again, don't just let your client go anywhere. Make sure they're getting properly educated, not just upfront, but after the fact, which is massive, something that we do as well. The annual follow-up, so important, just like a financial planner. Ryan, what's the best way for someone to reach you if not introduced by us? Is there somewhere that you'd like to direct people to look you up, or your company, Neo?
You can go to our Facebook page and you just put Ryan Grant, Neo Home Loans. Facebook, our website is ithomeloans.com, which is insightteamhomeloans.com. Really, if you just put Ryan Grant Mortgage in Google, you can get our information anywhere. But yeah, I believe if we all work together as real estate and mortgage professionals, we can redefine what it means and create a new expectation that the client should have that has nothing to do with the transaction. Our goal is to expand people's scope and stop looking at a 30-day transaction and start looking at a 30-year relationship. That somebody, how is somebody going to help you? Because if you look at the wealthiest people in America, they're not wealthy because they have money, right? They're wealthy because they have information. And our team and our group, and just like you all, we are committed to being proactive with that information in every aspect of real estate or finance, which means that your mortgage and real estate professionals can help you grow wealth in ways that you never thought, as long as they're committed to that path. And so I'm just excited to keep driving that train.
Thanks, Ryan. Appreciate you having on. And again, guys, listening to this podcast, lots of good information here. If you want to find out more about Ryan and his team, we'll put the links below, and reach out to us directly if you'd like to be connected. Thanks again, Ryan. Appreciate you having you on.
Thanks, gentlemen.
Thanks,
Good
Ryan.
talk.